Where do you want to start with CBDCs? 'Cause I don't even know where to start.
Well, what they're focused on right now, and this is what I thought was a little bit. What I want to do is not paint this picture that this is like a group of elites, like a global cabal, trying to create this system of control and surveillance, even though it might end up that way. But it's really the technology is forcing their hand, and every single time they have to centralize more and more and more. And what they're trying to build now is one unified ledger that connects all the CBDCs around the world. And basically it centralizes from just like one central bank and one government to an international financial institution like the Bank of International Settlements running the ledger of the entire global payment system and monetary system. And that's a problem because, like I said, they function outside of any one government and they have no oversight. And these are unelected bureaucrats. And really what it comes down to is who controls the ledger. That's always the question that needs to be asked. And when you look at their designs, they're choosing the design is the most centralized. It has one rule book. This is what they say. They would want one rule book with one network operator or administrator who would be able to provide who gets access to the protocol and basically control the rules of the protocol. And they essentially are saying that the biz is well positioned to be that network operator. All the research kind of points to them like, well, we're already doing, international settlements and we're kind of sitting at the middle of everything anyway, kind of, fostering collaboration between central banks. So, we're probably the most likely candidate to be that network operator, that administrator of this unified ledger for everybody. And I don't think there's enough debate over or like public discourse about the design choices that they're making. And they've reached out to public comment, the biz, but also like the ECB, as well as the Bank of Canada and the Fed about CBDCs. And I've read them all, and they're all extremely negative on a net basis in terms of the public comments. I mean, over 80% for all those public comment periods were completely negative responses from the population saying, we don't want this. But they just continue anyway. And it's because they have to stay competitive in this new, where you have fintechs offering services as well as stablecoins, as well as Bitcoin. They have to just continue to centralize. And it has like, what they find is that they don't even know if this design is going to actually do what they want, which is improve the efficiencies of cross-border payments and things like this, because it doesn't actually fix the underlying problems of why cross-border payments remain expensive, which is that there's different jurisdictions with different regulations, and they're not all interoperable, and there's so much cost. That's why you have this like correspondent banking system that still costs like 10% on average and takes 2 to 3 days. When they build this like unified ledger, they'd still have all these like issues in terms of like different regulations, and it could still be expensive. It could be extremely costly. And then there's like the component of privacy and surveillance. And even they like say like, I'll pull this one quote. I think it's powerful to use their own quotes against them. But even they say, of course, technical design alone may not be sufficient to counter concerns that public authorities would use CBDC systems as an instrument for state surveillance and control. It is easy to imagine how sensitive transactions data could allow authorities to track individuals and block their access to CBDC payments. That's the business own research, but they continue forward anyway. And so what I want to like note is just there should be more public discourse and awareness about what they're designing, because maybe we could at least, if they're going to do it anyway, which I think it's inevitable, like maybe they can at least design something that's a little bit better than what they're designing right now, which is like the most centralized version of this unified ledger global CBDC system. And maybe we can delay it a little bit and cause like a little bit of more debate happening in governments as well as in the public discourse about these things, and that'll allow Bitcoin to be adopted while these things get delayed a little bit before they inevitably come. But
is the end design, if I'm in the UK and I'm using Bitcoin, the Rishi's CBDC and I want to send you some money, that I can send it and that it all goes through this one global centralized ledger.
Yeah.
So it would go straight to you, instant settlement, almost probably, through some jiggery pokery in the middle, exchange rates, whatever they do. But essentially, it's a token swap.
Yeah, basically, they've done pilot research of token swaps.
It's so much insanity built into that because obviously the UK. So would the UK government be giving up control of their CBDC to be managed by the biz?
Well, likely they'll have different. It'd be basically a permission blockchain where there'll be like different notary nodes, is what they call it. It's just funny because they're like recreating the same system, even though Bitcoin solved the double spend problem. They want to maintain control and say like we need a digital notary to basically like these different validator nodes, which would be different central banks, would all plug in, and they would be able to just verify the transactions. So they're basically like incorporating middlemen and trusted third parties into these this distributed ledger technology that they're building. And it's kind of like the exact same system that we have, right? I mean, it would just be a third party middleman, but it would be like via a validator notary node is what they called it, and who would validate the transactions, allow it to go through to prevent any kind of double spending from happening. But at the top, what you have the validating nodes, which would be like the Bank of England and the Fed, but there would still be a protocol administrator or operator who would actually control access to the nodes and actually run the whole thing. And that would be the Bank of International Settlements. And ultimately, they would be they would have the power to change the rules of the protocol, restrict access for countries.
So they could turn a country off.
Yeah, they could turn a country off and block them from the protocol. And like,
but does that mean their whole financial system will fail?
Well, I mean, looking down the road, if it really does become where CBDC is the only thing available and you shut off the money of an entire country, I mean, that would be very problematic.
Does that then kill Visa and MasterCard as well? What's the role of Visa and MasterCard in this world if they're not providing credit?
That's a good question, actually. I would have to think through that.
Because at the moment, I use my, so if I don't know, so when I buy something here, I can use my Visa from a bank in the UK. I can scan it. And look, I pay an additional fee because there's some movement of money. I don't know what it is, $1 each time I want to use my card, whatever. But it happens. But Visa are involved in that transaction and they take a little cut, right?
Yeah, but they're the payment processors, so they still rely on like.
But there's no payment
banks on top of them. So like that's how the payment processing works.
But does the CBDC kill? Does it kill the banks? Does it kill Visa? Like, where's your savings account? Is my savings account with the Bank of England, and does my mortgage get paid?
No. So this is actually like a lot of people thought like, well, there's going to be CBDC accounts directly, like you would have an account at the Fed or the Bank of England. Sorry,
but the banks would then be layered upon the protocol.
Yeah. So like the way that they're building it now would be there's like a CBDC account within your bank. There's like your commercial bank.
Right. It's like the wholesale CBDC model.
Yeah. So like the wholesale CBDC model is basically there's transactions between the banks themselves. And then the way people think about CBDCs in their head a lot of times is like the retail CBDC, where there's actually like a digital CBDC money that we all use. A lot of the developments are just focused on the wholesale level right now. Now that can change over time. There's like a few retail CBDCs, like Nigeria is a perfect example.
Haven't they killed theirs?
No, it just had like very bad adoption. Basically, it's like a failed project right now. And there's other parts. There's like a Caribbean one as well that's had really bad adoption.
So. But the adoption is optional because it has to sit in parallel to their traditional system while they test it.
Yeah, they're basically like trying to incentivize people to use it through different like little tricks. Like they give a discount for cab rides if they use like a CBDC and things like that.
And is the low adoption in these places because people are educated enough to know this is bullshit and they don't want to be part of it? Or is it some other reason?
Well, I think in Nigeria, there's just a lack of trust generally with the central bank given the inflation rates.
Yeah.
And they just like see through this. This isn't like this new technology. And actually you see Bitcoin and stablecoin adoptions in Nigeria is extremely high on a per capita basis. And they understand that their central bank, it's just like a new shiny wrapper with the same inflationary fiat inside of it, with added control and censorship. So I think they just really don't trust the institution, the issuer of the CBDC.
I just can't see it ever happening.
But what if, like the US roll out universal basic income, but you can only claim that using the CBDC? Like, do you think that would mean that people would move to it?
It depends. Okay, so on the UBI, it depends. It depends how many people. Yeah, I see what you're saying. But it might be like it might be an airdrop, and then they spend it and stay out of the system, a bit like Chivo.
But if it's then a monthly UBI and they have to go back every month and like slowly you just start using it more and more,
Yeah.
like that's the sort of insidious way that I could see it developing.
Yeah, no, that's a fair point. Technically, it feels like this is a hell of a system to build.
Right. I know.
And it doesn't feel like...
That's why I think...
Well, if you look at Ethereum's roadmap, it's always like another 10, 20 years of like bullshit with like 5, 6 generations of nonsense that have got to be released. They have different like names for them, don't they?
Yeah, I can never remember
Mega
what they are. They've got
shard
so
or-
many, yeah.
Super Shard or whatever it is. It feels like something like that. This doesn't feel like something they could even do in the next decade.
No, and I think they would bungle it too. Like, I just don't really... They're not really good with technology historically. Like, central banks aren't known for it, or governments for that matter. Usually, technological advancements come from the private sector. So they're basically trying to reinvent the entire global monetary system and basically connect them.
At a time when there was like trust in institutions, global institutions, even national institutions, it feels like at an all-time low.
Yeah, and you gotta think like this would be... It has to be bulletproof. I mean, they're trying to... If it was hacked, it would be catastrophic. And so there's substantial...
Yeah, they could roll that back.
Yeah, well, they probably could.
Yeah, they'll roll
But there's
that back.
substantial cybersecurity risks from launching these things, and they talk about that, and they're like, "How are we going to do that?" And even like people don't like the Federal Reserve had like 50 data breaches between 2011 and 2015, and even last year they found that they suffered like a decade-long espionage effort from China, who had access to the data, and it was because of their poor data protection standards within the Federal Reserve. And these are, the Fed's actually, I wouldn't say the drivers behind the CBDCs right now. They've actually held off compared to like the ECB and stuff like that. But these are the people that you would have to trust to like secure this system, is these central banks to do it correctly. Because even one hack could like impact the integrity of the whole system. And that's why Bitcoin's so special, because it's never been hacked, and it's the most secure monetary protocol in the world, backed by computation. So it's
great advertising for Bitcoin.
Yeah, I think so. I think there's a ton of risk to launching a CBDC, and they line it out, and that's what Augustin Carson said before Facebook launched their Libra thing. He said, like, there's a ton of operational risks. We could disintermediate the banking sector. We could cause more financial instability because, we're creating more flows that could happen in the case where one country had a financial crisis. People could move into other CBDCs, which would cause, people to dump the local currency, which would lead hyperinflation of that local currency. Like, there's all these kind of risks. Spillover risks, if there is a crisis, it kind of like increases the interconnectedness of everything.
The other good thing, though, about a fragmented financial system is when one part fails, you've got other options. So my optionality when I'm in the UK is I've got my my Visa card. If something goes down with Visa or my bank, I've got an American Express credit card. Okay, I also have cash. Okay, I also have Bitcoin. I've got 4 different options, and the fragmented nature of the system, one can go down and the others still operate. One central system, if something goes down there, literally the whole thing could collapse. Because we have this. If banks go down, like NatWest may go down, and everyone who's with NatWest cannot get money out. Or Visa can have an issue, right? So having a fragmented system means you've always got optionality if something goes down and part of the system breaks. If it's one fucking system for everything, what's your optionality?
Yeah, and you're trusting these individuals.
Do not trust these individuals.
To run it, basically, right? And they can change it whenever they want in terms of the rules. That's what, when you can unilaterally change things, and typically what happens is they decide to debase it and print at will. It leads to corruption. It could lead to all kinds of things that impacts the integrity of the ledger.